Thank you so much for clicking on my video. I hope that I'm able to bring you something helpful, and if so, then please do subscribe and like the video so more people can learn about technical analysis, and that's exactly what we are going to do today. We're going to do some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, looking for some signals for GME and AMC as well. Those things have really started to break down, and we're going to go over them today, give you those daily ranges for the SPY and the Qs. That is what the options market is priced in. But first, we really have to answer that question that was on the thumbnail. We really have to see, is GDP going to actually save this market for a little bit of time? I would say for a little bit of time, because I think we're coming to an abrupt end, and we already might have began that abrupt end, and you guys know I'm leaning towards that bear market. But what do we need to decipher out of this? How is the market going to react is overall what you want to take away from this. You don't want to say, hey, yeah, if this is a good number, the stock market has to go up. It can go up. A stronger GDP can cause the market to go up, but it's important to understand that a stronger GDP also includes more inflation on the way forward. So you see the previous here of 1.4. Okay, 1.4 was the previous of the GDP growth rate quarter over quarter, and we do see an increase on the consensus to 2% and the forecast being 2.5%. That would be an increase, and that will most likely cause, if it comes in at 2.5%, it will cause those yields to go up as well. So yields may go higher with this, just because that would mean we are still in that inflationary scenario, and we're not necessarily dropping into a deflationary scenario yet in the stock market in the form of a recession, depression, or so on. So we have to pay attention to overall the reaction to this data, okay? So that would mean now we can get into our technical analysis, starting off with the SPY. And the first thing we need to point out here is you're down by that weekly expected move, okay? You're already down in that area. You have a couple days left in the week. So once you get down in this area, it can start to give you a little zone of support. And so we're really going to pay attention to this tomorrow, as we are extremely oversold. This is not a strong market in the current time frame, right? In this 30-minute time frame, you are in that negative trend. You're seeing that really form here and showing those swing trades, which that swing trade course is 90% off, guys. It's only $50 in the link in the description. I would highly recommend grabbing at least that if you're new to the market. If you're a little bit more advanced, you know how to swing trade, there is another course that is 90% off. I told you that I was going to leave the how to trade in more volatility, really the things you need to know to trade in any market. I'm going to leave that 90% off right now for just $100 down in the description. It has helped so many people, and I love to keep receiving those emails about how it has helped them, and you guys show up live. It's awesome. But this is overall what a swing trade looks like. Okay, you see this able to get positive for a moment, but what do? We drop down. We're still pretty close to that center line. We see that curl down. This bar right here actually was your signal that we were going to most likely see some kind of pullback, if not a big drop. The next day we gap down lower. So now it is interesting that these lows that we really broke through and where we gap to is actually our daily expected move, and that would be the 548.16 to the upside, and we do have 534.30 to the downside. Now remember, this is a 68% zone, so you will land in here 68% of the time. It doesn't mean you can't make flash moves out of it and then fall back into it. It doesn't mean you can't see us land outside of this by the end of the day. And something like GDP, if that is seen as very positive, you could see that big reaction. And we already see, if we're going to see positivity going forward, if this is going to be some kind of bottom because of GDP, and I just want to put this as a scenario in your head. I'm not necessarily leaning towards that in any way, because we don't have reversal signals. We're very negative here. So if we do see a big reaction from the GDP going forward, you see the structure we would make in order to go higher. We would see this break out, maybe test these levels, then come retest that area we just took back, and then see some kind of head and shoulders. I believe that is the best bullish case for right now, is a good GDP allows some kind of rapid buying. You have an extreme amount of implied volatility going into tomorrow. You have some of the highest daily implied volatility I've seen in a very long time. So a big move might be coming, and right now you're cooked to the downside. So what does this mean when you're cooked to the downside and you have a large amount of implied volatility? Well, if that GDP causes a negative reaction, things can escalate further. Things can really start to escalate, especially as you break through this weekly expected bottom side move. You can start to say that this 68% zone, you might be seeing one of those 32% times where you see something crazy. Now, you still want to pay attention to any kind of reversal signals when you're outside of this, because you do have that 68% chance to bounce. But right now, we're seeing no reversal signals. I would highly assume that we are going to make a reversal signal. You notice we didn't have it here. We didn't necessarily have the reversal signals here. We had little divergences on the Qs, but that just led to a little pop. That makes sense. You really need to make that solid base to see things go higher, right? So what you would want to say is if we head to the upside, you'd look for that double dip most of the time to see some kind of divergence, which will give you weakness. These are all things that I teach you in the courses. So if you're looking for some more knowledge on how to trade in a more volatile market like this, I love these markets. So I'm going to make sure to be live every single day and calling this stuff out as you are down by that weekly expected move. This is where you can see a reaction, and GDP could come out strong, which will cause, most likely, if people see that positive GDP, there is going to be some kind of buying back up. But you have to understand that that is going to bring those yields up. That is going to keep inflation higher. It is the opposite of what you want to see if you want inflation to come down. Going over to the Qs, we're just going to step into this real quick and just show, hey, where is it? It's down by that weekly expected move. This is as low as the options market is expecting the market to go this whole week. And we still have a couple days left. So we have to pay attention to what's going on here. We're heading down towards the monthly expected move. We have a little bit more time in the month. So maybe we want to buy some time, right? We could buy some time, and you see where we would head to create that structure to head higher, right? We would get that reaction. It might not be in one shot, but then we could see that left shoulder, that right shoulder. So left head, right shoulder to head up. I think that's a very good bullish case. If you're going to see a little bit of a bearish case here, I'd actually zoom out to a 2 hour. I'd see how deep this thing is and no real divergences down there at this point. So if you want to see further downside and this is going to continue to act like a bear market, then you might get that 2 hour to curl up to this and you fail and you actually drop lower. That then sets up some kind of signal down here. So I would really pay attention to that going forward. I'm sorry, baby girl is trying out some new food. I'm sorry if you hear some crying in the background. But as of right now, that would be something to look for. Now you've made the double dip, but we haven't created a divergence, so this doesn't look very strong. Let's go into a 30-minute. If you do curl up, you are very well in negative territory, so it's going to take a lot of work to get back. But something like GDP, after such a big selling, and we do see a dollar that we need to go over. Let's just look at it real quick. The dollar has been coming off throughout that day, okay? Throughout the selling, we do see the dollar coming off, then popping back up. If this turns down one more time, this is actually a sign of possible insider buying. So I'd really pay attention to that with these charts going into tomorrow, and we'll be live with you tomorrow morning. The levels to pay attention to with those daily expected moves: 472.31 to the upside, and we do have 454.45 to the downside. So something I would like to see here for a strong base in order to create maybe this structure in the future would be if we see that reaction, we pop back down for the double dip, get some kind of double bottom, buy that weekly expected move, then we see that reaction up. That I think would be the more likely better scenario for you bulls. Even though it's another turn down, it is a stronger base to actually head higher over time. So we'll pay attention to that. If we're not going to see any kind of reversal, then you're not going to see these 30-minute divergences. You're going to see this thing maybe pop up, trap some people, and then not be able to make that divergence and really violate that, right? Not do this type of behavior down here on your MACD and RSI. More likely we will see some more dramatic things happen. As we look forward into Apple, we have a lot of things going towards weekly expected moves, but they're not all exactly there yet. So we are seeing this pretty good patterns going on here. The 30-minute, this is exactly what the swing trading course will tell you, just in the opposite direction. We don't necessarily show you it to the downside too much, just because it is harder to swing trade to the downside. You'll learn that over time because the stock market most of the time goes up. Now you are dealing with a bear market, so you might want to try that $100 course because it will really teach you about the ranges and how to do this stuff. It's only $100, okay, guys? So I'm hoping to leave that up for $100 for a little bit of time, but get it while it lasts. So this is curling up to that center line. We drop below that 200 and boom, the fire begins, right? And so we head lower. We still, I believe, have a little bit more room for Apple to go lower. We're kind of flagging out here, so it's a little worrisome. Do we get that bounce that actually takes us positive? Do we get that bounce that takes us up into an area that's very important, kind of consolidate near that 225.84 and then break through? That would be a positive sign. As we pull up the 2 hour over here, you're just noticing how deep it is in negative territory. So any kind of bounce we do get here, if it's a strong one, most likely will set up a lower high. It really will. So really pay attention to that going forward with a lot of these stocks. They are very deep into negative territory. It doesn't mean you can't build back. It just means it is more difficult because as you get deeper and deeper into negative territory, this RSI can get overbought, right? This RSI can get overbought around this level, around this level. They can get overbought very quickly if you see a rapid move up, and then that might just turn down with something like earnings around the corner. Remember, that is a 50-50 flip. We'll talk about earnings a little bit more once Apple's earnings is a little bit closer. I noticed that it's next Thursday. Okay, so Tesla going forward, this thing is really dropping off. It can head a little bit lower. Where would it head to? Maybe our zone in here, right? We could head into our zone here, but I just want you to notice that 2 hour really pointing down. There are no signals of reversal yet, but we do have a rock in our stream. On this channel, we trade like water. That means we're always adapting, we're waiting, we're always reacting to the next move, and we're aware of scenarios that could be playing out and possible good trade setups. So as of right now, the 2 hour, we're aware of this, right? We talk about this in the swing trading course a little bit, how this is deep into negative territory, meaning if we do bounce from here, it's going to be tough to really take back all of this price action. You're going to need some very good news, not just some kind of retest and then you end up falling back down. Some kind of retest and you end up falling back down, and then creating that divergence in the future will keep you aware of that. As of right now, we do see Amazon creating something like this right here. So this is where we want to pay attention. Whenever you see something like this, you really want to go look at maybe the shorter time frame from the 2 hour, maybe the hourly, right? Because the hourly looks pretty clean here. If you want to, you can go into that 30-minute, look at this. You see on the RSI, we got some divergences going on down there. We have the divergence with the price action on the MACD as well. So if we do get that good news, it looks like Amazon could curl up that 2 hour, and that 2 hour would then reject, and you would have a rejection divergence here, which can send you higher, which can turn up daily charts. I want you to be very aware of this. This can turn up daily charts here for Amazon. And that would actually make some sense right here, because maybe we want to head up to this point or this point all the way up to here towards 192. And then we see that right shoulder almost, right? We see this little neckline here. We got a little bulk in here, but we have price action in here. If we go grab this liquidity, we can really start to turn over here. So we'll pay attention to that going forward. But if that daily does curl up, positive territory, positive move. So we can't be overly bearish. We need to realize that this seems like some bear market behavior as of right now, and Amazon's showing you a little sign that it could see a bounce going into tomorrow, especially if you get good news. And that's where trading like water really helps, because you trade like water, you're aware of the rocks in your stream. GDP is one of those rocks in your stream. You really want to see how the market is going to react and then make your reaction, right? You want to see how the market kind of takes in the data. You want to see what the signals are saying in front of you and then react. And that's how you end up going down into the meadow, right? That's getting in that stream that goes into the meadow, those winning trades, and not end up in some kind of sewer with the it clown, okay? NVIDIA here, 2 hour really curling down. Now this is, everyone say, hey, this is really, really bearish. This looks awful. It does. This looks really bad on the daily scale, but you're by that center line. So what we want to pay attention to is, do we see any signals that could be forming in here that could confirm with some good news? And what you are seeing is a 2 hour divergence. So weirdly enough, after tomorrow, if we do get some good price action, you can see higher moves from NVIDIA, and most likely if NVIDIA is going to turn up on the daily because of this 2 hour divergence, you see it down here on the MACD, you see it on the RSI at the same time, so we have to pay attention to it. If that leads to going to positive territory here, you can start to roll up this daily chart. What's the thing about the daily chart? Well, above you had a rejection here for the lower high, but you never really had divergence up here for the daily MACD and the daily RSI at the same time. So maybe we see some kind of hip fire move that takes us very, very high. Now you just want to pay attention to any form of weakness in this overall move, because if this is some kind of bear market behavior, then something like a little 2 hour divergence or something like that can have weakness in it, and we will pay attention to that for you. You can always come to my stream and ask for a random stock, but as of this moment too, just pointing out earnings around the corner for everything. So as we look at that 2 hour, very blatant divergence there. As we look at the 30-minute, we're going to see, hey, what does this have? Well, it actually has a 30-minute little divergence there as well. Not the best one, I would say, but as of right now, we would just want to pay attention. If that 30-minute goes positive, it's kind of likely that that 2 hour is going to turn up, and we want to pay attention to if that move fades. All right, so going over into AMD, I know a lot of people looking at this one. This does have the divergence. You are down by that that weekly expected move as of right now, and you can see that bounce. Remember, we drew this line of tapering, right? We were talking about tapering. So when you want to see some kind of bounce out of a stock, you need to see weakness and momentum, and that's where tapering can really help, because you see the downward direction here that we're heading. Well, then we tapered off and we got a bounce, and now we're holding that tapering as of right now, and you're starting to come down pretty dramatically, but you still could be holding that tapering. So we'll see if that gets some kind of reaction. You see how it would head higher on the 30-minute, right? We would go up, get out of our zone, get up, test a level that's very important, sell off a little bit, get back in that zone, and then be able to break through with some more buyers, maybe with earnings around the corner. Now, none of this is a given. Earnings is going to be a 50-50 flip. We say that all the time. I do not trade around earnings for the most part. If I do, I am going way down with that position size, because you're going to see huge reactions with earnings. So if you take any kind of play, you don't need to risk a ton of money in your option play. But for AMD, I just wanted to show you this 30-minute, and then we're going to flip over to the 2-hour and just show how that one does have the little divergence as well, but it's far away from the center line. So this would have to be a massive move to really get back. That can happen with earnings, but earnings is around the corner. It's not as of right now, so it could be next week. So you could see something like where the 30-minute, right, actually curls up, curls back down, curls up again, right? You get some kind of double bottom, some kind of little bounce here that leads you to go boop, 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 and then you actually go positive. So pay attention to the 30-minute going positive, pay attention to the 2-hour crossing up, and then make sure that is fully going positive to be confident in that move. If this sees that good price action and then just rolls down, sees that good price action and then just rolls down on the 2-hour, that is going to mean a negative trend is continuing here. So watch out for earnings for AMD, even though it might be good for you. We'll see. Now, Meta is one that I wanted to talk about because it has not reached its weekly expected move downside yet, and it's lower than 453.08, which is my overall support that we've used a few times for breakouts, a few times for some support in there. So we're paying attention to this level, and what are we seeing right here on your screen? Well, you have a 2-hour divergence, and you do have that double bottom. So if you do get positivity out the gate, you can see a good move for Meta going forward, and then I would highly recommend watching out for earnings. If you take some kind of play and you're playing this because the signals, if this crosses up and you say that's a good signal and that has divergence and that's very good, it's on the R side at the same time, that's fantastic. But I would highly encourage you not to think, oh, especially if you're making money up here, if you're profitable, I would highly encourage all traders to start to think of these big moves before earnings as a get out of jail free card. You already had a good trade. You can now get your risk down to 0 by not playing around earnings, or at least taking some off of the table to make sure that hit in case earnings goes the wrong way on you does not affect you that much. Now, this is a 2-hour divergence, so you want to see if, first of all, if that's going to dip lower to 453, but that is double bottoming as of right now, which can lead to the daily turning up. Now, that would be going positive. We have to see how strong that move will be, but this point makes total sense to bounce from, and then maybe we see some kind of bounce up, and then we'll see what happens with the earnings going forward for Meta. AMC, this one is pointing straight down below all the moving averages. It's below all of them. So this is a very bearish thing. But I want you to notice how we haven't really spread out these Bollinger Bands at all. So this is telling me, hey, this is bad. This overall means the price action should head down. Maybe we're going to go test that 437 again. If we break that, that's not going to be a great sign. Now we're seeing a little tick up in the post market. Remember, this is not dead by any means. This is still positive territory. It's just working, getting really tight, and then maybe we see an explosive move in one direction and you want to react. So on the 2-hour, what am I noticing here? Well, this is very deep into negative territory now. So if you want to see any kind of positivity, most of the time you at least need that 2-hour to get that positivity. You'll notice we used our 574, our weekly expected move. This is the unexpected area. So this is proof that the weekly expected moves are very, very useful. They do not want the price action of AMC above 574 this week, because that would be something unexpected. That is where the algorithm can kick in and send this thing higher into possibly a gamma squeeze. So they don't want that to happen. That's why you see the halts. That's why you see the halts that have a reaction to it, where you get more short selling, you get a major amount of selling, you get highly pressured to the downside when you get up towards these areas. And that's why this level is so important at this point. These change every week, so make sure to come back every Sunday so you can get this line on your charts. Very, very important. But you do need that 2-hour to cross back up. The last time the 2-hour crossed back up in this area, well, we were able to go positive for quite some time, right? And you see, Curled up, went positive, positive price action. So curl up, go positive, positive price action. That's how it works. It's literally that simple. 30-minute, what are we paying attention to here? Well, look how deep it is once again. So if we are going to get some kind of bounce here, in the fight from the short sellers is going to still be there, from the market makers, from the algorithms, all that good stuff, well, you may create some kind of reversal signal. Now, you still can pay attention here because you do have this flatness on the RSI down there. So that is telling me that the short sellers don't have much power to push this down. Enough people are holding the stock. But if you want to create that stronger base early, maybe you get some kind of bounce and you actually do turn back down, and we see that divergence. So divergence is great to pay attention to in these scenarios with these type of stocks, because it'll tell you when the short sellers are getting a little bit tired and when that momentum to the downside is dying out, and you're probably going to see a big move to the upside. We've used it before. It's worked out pretty well, and we got some price action sent up to about $6. So very good stuff there. As we flip over to GME, we're noticing something a little different right off the bat. Okay, you not only have that flatness on the RSI down here, but you do have a divergence on the MACD that is closer to that center line for GME. So GME actually was able to break down through that 24.56. So that's a big deal, because right now the 2 hour is straight up pointing down, and that is not a good sign. You need that to reverse back around. Right now it's going to fall off a cliff, because that's what can happen when you start to reject in negative territory. So that's how important this really was. And if we go out and we look at the daily scale, this is still saying daily pullback, but that did curl down by the center line. So if that goes negative, that can be some bad news for a while. We can head all the way back down to something like $17 before we get a reaction, maybe with earnings going forward. So we're paying attention to the right things. We have not spread out these Bollinger Bands on the daily scale yet. You can see that they are relatively tight. So the bullish case here would be, hey, maybe this, even though it's closing at the low of the day, which usually means that you're going to see more downward pressure, and that would send you negative. If this is able to turn around in any way, get back above these moving averages, you need these daily MACDs to curl up to see positivity. I'm sorry to say it. I wish this thing goes up. I hope this thing goes up. But just because I wish and I hope doesn't mean it's going to go up, right? I need to see these momentum signals confirming in order to see an upside move. And in order to do that, right, in order to prove that even, you would just say, well, when's the last time it happened in negative territory? Boom, it got above all the moving averages. Then it gets above all of the moving averages, being the 200 as well. And we see a big move. What do we do here? We close above all the moving averages. We cross up on the MACD the next day. And what do we see? We see a big move. Now we've seen that close above the moving averages, and we see a move here. You still probably could consider it decently big. This was overall an 11% move in 2 days. That is a big move. Weirdly enough, in the market, that's a big move. Maybe not for GME and AMC, you wouldn't consider it big, but it is a big move. So if this daily curls up, you do have that opportunity, but right now it is pointing straight down. As far as it goes with volatility, look at that thing. So this is what we were talking about, how we did get the overall, I would say, bounce in the market on, say, Monday. And then now we're seeing more turmoil, more things start to really ruin it for us. So right now, the volatility really screaming higher. And this makes total sense because of this. You guys, I was pointing this out. This is a very, very big signal here. And you're wicking down to those moving averages and just blasting off. So the biggest moves in volatility will just keep going, and they will ignore the rule. And that rule is on the daily, whenever the volatility is up by more than 10%, you have an 85% chance in the next 2 trading days to see an up day in the SPY. And so what that tells me with this 22.5% up day, hopefully someone was able to benefit from this information, but you can see that that is up by 22%. So overall, that tells me that in the next 2 trading days, I do have that 85% chance of an up day, and I have big news like GDP that could actually help out some bullishness come back into the market. So we'll pay attention to that. As of right now, we want to look at the 2-hour scale and just show there is some forms of divergence here. So if you get that good news right out the gate, you can roll over this 2-hour. And then if that 2-hour does roll over, you have a good probability to roll over this daily for maybe some kind of full retest. And then we see that big move in volatility come back. This is the last note I'm going to tell you about volatility. The biggest crashes in our history, volatility has gone up by more than 10%, and it did not look back. It just kept going. But this time we looked back. So I kind of feel like like, and this is just a feeling, right? It's just a feeling as someone who has traded for a long time. I have a feeling that this is going to come back because we came back the last time. I think that this is going to behave more like a bear market where it will confuse most traders. And that's why I really want to push you to try and take some of that course, the $100 course down in the description, because it really will help you out. It'll show you how to use these weekly moves. And in some kind of more volatile market, the weekly expected moves are so freaking useful. So you need to understand them. You need to understand how to trade around them, right? Understanding the MACD, the RSI is great. Divergence is very important, but understanding the weekly expected move and those things together really open up your eyes. You want to talk about being woke? That really wakes you up. It really does. So highly encourage you guys to go check that out and pay attention to volatility tomorrow. Make sure to move around those rocks in our stream as we are trading like water. Thank you guys so much for watching today. I really do appreciate it. Thank you guys for liking, subscribing. You guys are fantastic. I look forward to coming in tomorrow for tomorrow's stream in the morning. We had some fun this morning. I'm going to try to stay on a little bit longer tomorrow. Okay, maybe an extra hour or so, just to make sure that we're really watching these reactions to GDP if they make some kind of upward move to those daily expected moves. So look for a little bit longer stream tomorrow. It should be a lot of fun. I look forward to seeing you there. You're welcome to come in and ask questions about anything, courses, or even just about the indicators and stuff. I am an open book for the most part. I will answer pretty much any question that someone asks me, and people who have been a part of my stream for a while now can attest to that. I am someone who reads chat very extensively. I try to interact as much as possible. So thank you guys so much. Good luck with your trading tomorrow, and I will be here for you in the morning. Peace.